Hey there, traders, and welcome back for episode number 110 from the StockBandit.tv. I'm always glad that you've joined me. Last week I did not post a video. Obviously, it was Thanksgiving weekend, so I was busy with family, hanging out, doing some fun stuff, and really just getting away from the market, and it proved to be a good week to do that. We saw several gaps taking place during Thanksgiving week. We saw really no meaningful technical events take place, and we saw incredibly light volume along with that. So taking a look now where we are still range bound across the board. We are stuck in these high level bases that really could pave the way for another run higher, but so far they haven't done so. In fact, last week we did see opportunities for the bulls to really pounce on and really give this market another run to the upside, and they just couldn't quite close the deal. In fact, on Friday, the NASDAQ broke out. It cleared this 2205 level, got about 9 points above that, and then ultimately fell right back down into the range. Obviously, volume is back in full force, and that's very good to see. But for the near term, we need to see a close above 2205, that's this upper resistance level, or down beneath this 2140 level. That's been closing support for this market. It's been generally respected on a closing basis. So that's our range right there. It's about 65 points wide. We are still at the upper end of it, but we have yet to really bust out of this range and leave this range in the rearview mirror. So for the S&P 500, that upper end is up here at 1113. We actually cleared that 3 different times last week. At the end of the week, Wednesday, Thursday, Friday, on an intraday basis, we saw no closes above 1113 though. Every day we fell right back down into this range, and so price is still just sitting here moving sideways, going nowhere. Obviously volume here again is back, which is very good to see, but it's a little bit of a concern here for the bulls to have multiple opportunities to break out and not get it done, because this market is nowhere near short-term extended. We've rallied up, and then we've just moved sideways. So this is a channel pattern here that really could pave the way for another launch to the upside. But for now, 1084 is this lower support down here in the near term. 1113 is up here, upper resistance. So those are the levels to be keeping an eye on. And then for the Dow, this index actually saw very big volume on Friday. But once again, after clearing the 10,500 level 3 different times to end last week, it failed to close above it, finishing at 10,388. So here again, this index is really range bound here, hovering well above former resistance at the 10,120 level. That should serve as some support if it is met with, you know, some kind of a pullback here. But for now, upper resistance is the most well-defined near level. That's at 10,500. And again, we've got to see a close above that if this market is to really get back on the move. But once we do, I really think that we're getting into some of the best part of the year, this next few months. In fact, I say year, that's probably not the right term. This is kind of the trading season, I should say. And, you know, I'm excited about what lies ahead once we do get out of this range. But for now, we've got to stay pretty selective with new plays, given that there is so little follow-through out there in the averages. That also is going to carry over into individual names and also bring very limited follow-through. So it's a time when shortened time frames for trades is working best. Last week we caught some excellent day trades, and I expect that to be the case at least for the early part of this next week. So let's see what we get. But thanks again for joining me for this episode. I will be back soon with more videos, but in the meantime, trade like a bandit.